In this week's episode of the Stockscores Market Minutes, I'll talk about the all-important skill of knowing when to sell. I will then do my regular weekly market analysis. We'll look at the day trade of the week on RNET and do a Stockscores market scan in search of opportunity. All right, so how do we know when to sell? Well, it's very important to make sure that we let our winners win. And that means having an exit strategy that gives a little bit of leeway because stocks inevitably will pull back along the way in a longer term upward trend. We must also, however, have a stop loss point to protect our losers from becoming big losers. And so before you buy a stock, you should define support from the stock chart before you buy and make a plan to exit if the stock falls through that floor. Now, I'm going to show you a chart in just a moment that demonstrates what this means. Now, once the stock is in an upward trend, we're going to look for a break of the upward trend line as an exit signal. And that's quite an aggressive method. If we want to be less aggressive, then we can look for the break of an upward trend line after the formation of a falling top. Now let's take a look at the chart of Microsoft, and I will demonstrate those key points here. Now what we're going to do is draw some lines. First thing we're going to do is draw an upward trend line. And so you can see that the upward trend line looks something like that. Essentially what we do is we touch off all of the bottoms and just draw a line across them. We could have done the same back here. There was an upward trend line. And notice back in February, the stock broke the upward trend line after the formation of a falling top. Now, a falling top just means a little price peak that was lower than the previous one. Now, notice on Microsoft as of Thursday, we broke the upward trend line after the formation of a falling top. Now, there's nowhere else in this upward trend that has happened, and that is a sell signal for Microsoft. If you are what we call a position trader, where you might hold a position for maybe weeks or a few months, you have an exit signal. Now, the long-term weekly chart for Microsoft is still okay, but the short-term daily chart has given a sell signal as of Thursday. And we know that because the upward trend line was broken after the formation of a falling top, and that may lead to something like this, a pullback like we had back in March. All right, let's get into this week's market analysis, starting off with the US markets. And here is the chart of the S&P 500. And you can see that an upward trend line for the S&P in the short term was broken as well. Now, we shouldn't get too concerned because this is only a 30-day, 60-minute chart. So that's a fairly short-term sell signal. We may see the market come down into here, but we don't really have a major breakdown just yet. We can check the chart longer term. We can look at the weekly chart here, 3-year weekly, and there we see that the upward trend is still intact. Now, we did try to move to new highs and kind of failed this past week, getting stuck at this resistance. So I do think I have some concern that we'll get a little pullback. I think the market wants to get back to the old highs. It looked like it was going to early in the week, and then that buyer strength kind of fizzled out at the end of the week. So we'll have to keep a close eye on things next week. Short term, we could get a pullback. Long term, the trend is still up. Looking at the Russell 2000, you can see that it broke out of that pennant pattern. We talked about that last week. We've kind of been waffling sideways since then. Support right now is down around here. As long as the small cap stock index, the IWM, does not move down through that floor, I would remain fairly optimistic. On to the Canadian markets, and here you have a chart of the TSX. Let's draw some lines. Just draw a line across the bottoms. And you can see that the upward trend is still intact. This is what's called an upward sloping channel. You can draw 2 parallel lines, and the market's just kind of waffling in and around in between that. It is now down to support, so it should bounce. So the Canadian market, having pulled back for 3 or 4 days last week, is now at some support where it should reverse and start to move higher. We'll keep a close eye on that next week. Long-term chart, also still in that upward trend in the sort of medium term. Until we break that upward trend line, I wouldn't get too concerned. However, if we get the weekly chart making a strong break of that upward trend line, we will have the formation of a falling top, and that could lead to lower prices for the TSX. All right, moving along, TSX Venture is in that strong upward trend, starting to show a little bit of toppiness. So I would be maybe a little bit cautious about perhaps taking some profits on some of those micro-cap Canadian stocks, but still looks reasonably okay, no break of the upward trend line. On to commodities, let's take a look at gold first. You can see that gold's chart also in an upward trend, but it's gone parabolic. Parabolic because here it was in a linear trend, and now the trend is curving to the upside. And that tends to happen when investors get emotional, they chase the market higher, and that's often the first step in a topping process. So no reason to sell the gold stocks or the gold market in general, but you definitely want to be cautious and dance close to the exit door because buying getting a little bit irrational in the short term, and we may see a pullback in that sector. On to oil, it's trying to break out. It tried this past week, started to move up from this rising bottom, but volume is still low, and so there's not a lot of enthusiasm here. So I think the oil market is stable, but it doesn't have great signs for an upward trend. All right, and finally the fear chart. You can see that fear is falling. You've got a series of falling tops, and that means that we are generally in a downward trend for fear. If we break down through the support, then fear is going to start to move back down. It is still elevated. This is where we were prior to the pre-COVID crash, and we're still quite a bit higher, so I would say fear is still moderate, but it is slowly coming out of the market. So my ratings then, neutral on both time frames for US stocks, neutral long-term for Canadian, and bullish short-term. Gold, bullish on both time frames, but I do want you to have a little bit of caution as there may be some profit taking soon in gold. And oil, neutral long-term, bullish short-term. Stocks showed some signs of short-term weakness last week, and that may develop into more weakness next week. And therefore, traders should be cautious with holdings and selective with new entries. Gold is becoming an emotional chase higher, and it is due for a pullback. Oil is starting to move up, but still lacks excitement. No rise in fear yet. All right, next up, we're going to do the day trade of the week. Before I do that, just a reminder to subscribe to the channel. Click on the little subscribe button. If you want email notifications when I upload a new video, click on the little notifications bell. That helps us out a lot. And if you like this video, please click on the thumbs up. All right, let's get into the day trade of the week. And this was one from Thursday, the symbol RNET. As is often the case, I know nothing about this company. All I do is follow market activity. And when I see abnormal buying and abnormal price action early in a trend, I jump on it. And it's happened right there. That is our action candle indicator. It is a measure of abnormal price action and abnormal volume. You can see volume was increasing. There was a crowd gathering in this stock. That was at around $2.58. And within just a few hours, the stock hit almost $4. As a trader, we want to watch for that break of the upward trend line from a falling top. As we were doing that on the shares of Microsoft at the top of the video, we can also do that on this one because we had the falling top, we had the upward trend line, and we broke the upward trend line from a falling top right there, locking in about 12 RR, which means 12 times risk. So the economics of this trade are as follows. For $100 of risk, we should buy 1,240 shares back on Thursday morning at just about 10:15, 10:20. That 1,240 shares required about $3,200 of capital. Because the stock is under $3, you cannot margin it, which means you have to put up all of the capital to take this trade. But still, it earned a 12 RR gain, which means a $1,200 profit for $3,200 of capital, notching a 37% return for a stock that you held for, maybe 4 hours. So that's a great trade. And just another example of the kinds of day trades that we do in Stockscores Active Live every day. All right, let's get into the Stockscores market scan. I'm going to jump over to the Stockscores website. I brought up a scan called the Abnormal Breaks US. This is a scan available to investor members of Stockscores. We're going to run that scan. It essentially looks through every US stock in search of those making an abnormal price move with strong volume. And you can see that the scan found 31 different stocks. It did that on Friday. So now we're going to take a look at the charts to see which ones have good chart patterns. And that's what it's all about. Just because a stock is behaving abnormally doesn't mean it's worthy of a buy. We still have to check the chart to see if it has a good chart pattern. So as I go through these, I'm looking for breaks to the upside from low volatility. Here you have a stock that did that, relatively low price stock, just under $1. But look at the big volume spike and the big abnormal price move. It's pretty good. I'm a little worried about resistance right there at $1. It was unable to break through that on Friday. So I would rate this one a 6.5 out of 10. In other words, good, but not great. As I continue to cycle through these, you'll notice that some I pass on. For example, this Discovery Metals, it's a great hold, but notice that the trend is going parabolic. That means it's getting a little extended to the upside. I don't want to buy stocks like that. I like to buy them back here when they're first breaking their downward trend line from a rising bottom, or perhaps here when it was breaking from a cup and handle pattern. Those to me were the entry points. Now the stock is up a lot. It remains a good hold, but not something I would want to buy right now. So as I cycle through these, I'm just looking for these predictive chart patterns. Here I see one that looks pretty strong on the daily. I also like to take a look at the 3-year weekly chart. If I like the daily, I'll do that. And the 3-year weekly looks pretty positive as well. You'll see that this stock was in a downward trend line. It built a rising bottom, and now breaking from a rising bottom, and it had a nice move into the close on Friday. This was actually a stock that I featured to my tradescores.com alerts service, which is available at tradescores.com. It was featured about half an hour before the close on Friday, and it actually moved up quite nicely into the close, so I like that one longer term as well. So that's a market scan, just a quick overview of what we can look for in the market with that abnormal activity using that tool. Well, that has been the Stockscores Market Minutes for July 27th. I am out of the office this week, which is why you see me in a hotel, but I will be back to normal next week, or will I? Maybe not. I'm going to take a little holiday next week as well, but I'll do the video again from a hotel somewhere. And I hope that you enjoyed this week's issue, and we'll see you next week. As always, trade well.